Hello and welcome to the week ahead as we focus heavily on the UK and the US. Certainly coming off the back of that interest rate decision from the Bank of England where we saw a 25 basis point cut, but a potential lean towards a 50 basis point cut from one member. It does really lead in heavily for this week, but the focus really dominantly is going to be around that inflation reading coming from the US in the middle of the week. So first and foremost, here is the breakdown for the big ticket items according to Trading Economics. And you can see here really things get going on Wednesday. CPI numbers coming out of the US, followed up by an appearance from the Fed Chair Powell. Now, key to this is the fact that, for months I've been talking about some of these different base effects and when we're going to see significant disinflation. Are we reaching that point? Well, we've also seen an uplift in terms of near-term inflation as well. So there's sort of two different things that are coming into play here. So certainly it's going to be an interesting one. Then Thursday's all about the UK with that GDP figure, the monthly number, but also the quarterly numbers as well. So let's get going with that focus on the US first and foremost. You can see here in terms of the CPI numbers, an expectation that core comes in at 0.3, headline comes in at 0.2. Of course, we know that Donald Trump has come in and managed to drive down energy prices, so that should help on the headline number. 0.3, not too bad really when it comes to the core metrics as well. Then you can see further out in the week, we've got PPI inflation, so factory gate prices essentially, initial jobless claims, and then retail sales on Friday as well. So relatively busy on what is essentially quite a quiet week elsewhere in terms of data. So here's a breakdown in terms of the outlook for CPI inflation. Now, core CPI is significantly above core PCE, which is definitely worth noting because the Federal Reserve can easily just look beyond the core CPI number, but it's likely the markets will react to it nonetheless. But if we look at this, so CPI 2.9, core 3.25, if we look at the recent trajectory, it's that headline number that's really been troublesome because it continues to climb up and up and up on the monthly metrics. You can see those green bars in the middle. Well, like I said, there's an expectation that we see that come back quite heavily this time around, led by that decline in terms of energy prices. And should that come to fruition, then you can see if we cast our mind back and you look back to the beginning of last year, we've got some pretty significant figures that are going to be dropping out. So if we can keep these monthly metrics relatively low, then you do have the potential for disinflation. But certainly over the recent months, over the past 3 months in particular, when it comes to the headline number, but over the last 5 months when it comes to core CPI, they've been tracking above where we need it to be on that monthly basis. So we really need to see it brought down in a big way, or else we're not going to get back down to target. You can see in terms of the 8-month annualized. So where will we be in 4 months? And that's when essentially the next 4 months of sort of heavy inflation you can see on that middle section. Once they drop out, where are we? Well, headline 2.15, but the core 2.73. And I guess the question mark is, do markets care too much about the core number? It's certainly something that they will be looking at and reacting to if we see a significant move higher. But if core CPI moves higher and core PCE doesn't, then you could still see the Federal Reserve look beyond that metric. And you can see the recent sort of shift has been towards zero rate cuts within the first half of this year. The June meeting is currently priced in as the most likely to see that rate cut coming into fruition. And you can see in terms of the expectation for the decision to retain sort of continuing to climb, and we're seeing a pricing away from 50 basis points. So markets are starting to grow a little bit more fearful that we might not necessarily see something from the Federal Reserve the first half of this year. Was still the base case scenario that we do overwhelmingly, but that shifting in price will be key here. And as we see right now, 2.9, we have seen an uptick in terms of CPI. Is that going to flatline as markets are expecting? You can see here an expectation of 0.2 and 2.9. If we do so, then that could be beneficial when it comes to markets. This is the Dow Jones Industrial Average, and you can see here that we've rallied up into resistance, and we're starting to come back a little bit following that move up into resistance. the key thing here is if we see some weak inflation data, it's going to give us greater confidence that we do see the bulls come back into play in a meaningful manner. You know, we've seen this significant sell-off into the new year. We've seen this rally, bit of a pullback here that's been certainly heavier in other markets compared to the Dow. Whether that sort of lasts or not remains to be seen. And certainly if we see greater confidence of a rate cut, then we're likely to see the bulls really starting to take hold once again. You can see as we sort of rally back into resistance, start to falter again. So certainly I think this inflation gauge is going to be really key in determining sentiment going forward. In terms of the US dollar index, we can see rolling over quite sharply once again here. Following this rally, I think there's a good chance that we do see this market top out, just like we saw post inauguration for Donald Trump last time. We saw a pop in terms of the dollar index and we started to see it roll over. And then we saw pretty much a year's worth of downside for the dollar. So certainly a key one to be watching out for. And next up, let's look at the likes of the UK. We have got some key data points coming out of the UK, and that comes in the form of GDP on Thursday. Essentially flat on the quarterly numbers. We're expecting to see a slight move higher in terms of the year-on-year numbers. The monthly metric 0.1 again. And yeah, so we're not necessarily expecting a huge amount, but essentially when we sort of wrap this up, we're looking at UK economic data. It comes off the back of a Bank of England interest rate decision where we saw a 25 basis point cut. And so the outlook here is generally going to be based upon, in actual fact, let me just jump onto this chart here. So we're talking about the economics. This is the pound against the US dollar, which is the blue line overlaid with the services PMI. So that's a proxy for the for the UK economy, right? So if we see a weakening economy, we generally have seen weaker pound, stronger US dollars. We see that haven demand coming into play. So essentially, if we see strong GDP numbers, then there's a possibility of a stronger pound. We see question marks about the Bank of England's interest rate pathway and a possibility for them to be more patient. And that's the sort of general outline as how you're going to approach this data release. So in terms of cable, we've been rebounding of late. And so the question mark here is, do we see that weakness coming into fruition? Like I said, I think there's a good chance that we do see the dollar starting to worsen if we see further sort of allaying of the tariff concerns coming into play. And certainly if we see weakness in terms of that inflation gauge. In terms of the pound, we could see further strength coming into play here. Certainly if we do see some strong GDP data and economic data. But bear in mind, like I said, we've seen one member voting for 50 basis point cut at the time when we've seen that 25 basis point cut from the Bank of England. And so there's question marks around that pathway as well. So the possibility of weakness for the pound coming into play here. So rebounding at the moment, I think there's a good chance that if we're going to see a dominant move here and a potential bullish reversal, it's probably going to be led by dollar weakness rather than sterling strength. But nonetheless, if we're looking for the possibility of, say, a weak move for the pound, i.e. more rate cuts coming into play and a weak GDP number, I'd probably look at something like euro sterling and a potential pop in that in terms of relative moves. I hope that's been useful. Make sure to like and subscribe for more content here at Scope Markets. Have a great day and have a good weekend. And of course, have a great week.